So we're still in Chapter 8. This is Learning Objective 3. So far what we've done is we've figured out how the allowance method works. So I'm going to assume that you have that down. What we get to now is the next question, which is how do we estimate the amount of bad debt expense? In other words, in the allowance method, you've been given, oh yeah, we think bad debts are going to be, 40,000, they're going to be 22,000. How do we get that number? So basically, we have two methods. One is based on the sales, and the other is based on the amount in accounts receivable. The percentage of sales method is an income statement based approach. The percentage of receivables is a balance sheet based approach. So if you think about the journal entry that you do with receivables, it's accounts receivable debit, sales revenue credit. Percentage of sales focuses on the sales side of that. Percentage of receivables focuses on the accounts receivable side. Okay, so let's just, what I'm going to do is use brief exercise 8.6 to show how the percentage of sales method works. So I'm going to be using brief exercise 8.6, which gives you the following information. It tells you you have sales returns, and that 2% of your net credit sales are going to be uncollectible. So your first step is, you can see over here, the first step is you're going to figure out what are your net credit sales. So to get that, you're going to go the 800 sales less the sales returns and allowances. So you're going to come out with 760,000 of your net credit sales. If 2% of that is going to be uncollectible, simply go times 2%, and that gives you a number of 15,200. Okay, so this is the amount that you think you are not going to collect, and at this point, with the percentage of sales method, you simply make your journal entry, bad debt expense, and your allowance. And I am going to, from now on, just be going allowance for doubtful accounts. And you can do that on an exam. You don't have to write out doubtful accounts every time. I'll know what you mean. And so we would simply go 15.2 and 15.2. That's supposed to be a debit and a credit. Okay, so you're also given in the problem, they give you the balance. It says the allowance in the doubtful account, it says the balance in the allowance for doubtful accounts is 9,000. That information, when you're using the percentage of sales method, is not relevant. You don't need to use that. The percentage of sales method does not really care what's in the allowance account, so it does not factor it in. It's a simple two-step process. Compute your net credit sales, so you get your net credit sales, which is your sales less your sales returns and allowances. And then step 2 is you just multiply it by the percentage, and that gives you your amount of bad debt expense that is estimated to be uncollectible. Okay, so you want to try just a few of those. Make sure that you have that down. It doesn't seem that bad. Percentage of receivables is more of a, it's got another step to it. And I'm using for this brief exercise 8.7. And so this is the information you're given. You have the receivables, you have what's currently in the allowance account, and it's a credit balance, and you have 1% of your accounts receivable that are deemed to be uncollectible. So we have a couple of steps here. The first step, we're going to compute the amount of, compute the amount you expect to be uncollectible. So compute the amount uncollectible. So to do that, we're going to take your accounts receivable and multiply it times the percentage you think will be uncollectible, which is 1%. So we are saying 4,200 is going to be uncollectible. With the percentage of receivables method, this is the number that we want to have as the ending balance in our allowance for doubtful accounts. When we get to the balance sheet, we want to go accounts receivable of 420 less our allowance for doubtful accounts of 4,200. So that's where we want to end up, because this is the amount we believe will be uncollectible. That's what needs to be the ending balance in the allowance account. So we have computed that amount. The next thing we have to do is to compute the amount, of the entry, the journal entry needed to get us to that point. So the easiest way to do this is to do the T account for your allowance for doubtful accounts. Right now it has a $1,500 credit balance. The ending balance needs to be 4,200 when at the end of the day. The question is, what amount do we need to get there? And if we do the calculations out, we find that that amount is $2,700. And that is the amount of our journal entry. So we would go bad debt expense, 2,700, and allowance, this is getting very short here, allowance for doubtful accounts, 2,700. Okay, so that's your basic percentage of receivables method. And the key to keep in mind is that once you compute the amount collectible, unlike the percentage of sales method, you're not done. You have to figure out, this is your ending point, you have to figure out what journal entry do you need to get there. Part B of this exercise says, instead of a balance of 1,500 here, what if instead of that we had a debit balance of 800? This would mean that when we didn't quite estimate enough last time, so we had more write-offs than we estimated. So this is our ending balance here is a debit, and we still want to get to 4,200, right? So we have to say, what entry do we need to get there? And that amount would be 5,000. So with the percentage of receivables method, your journal entry depends on what the current balance is, the unadjusted balance is in your allowance for doubtful accounts. Okay, so you've got your percentage of sales method to estimate the amount of bad debts, and you've got your percentage of receivables.